Oh, very good question. I suspect very little. The market should be expecting a tax and spend budget. The Chancellor aims to increase government spending as a percent of GDP by 3%, so this is a significant chunk for the UK relative to recent years. The market should focus on the details. What will the Chancellor actually spend the additional money on? If it's focused on investment, I reckon about a third of it will be. That should be positive for longer-run growth potential, but we should keep an eye on things like minimum wage hikes, corporate taxes, because if he goes too far in those directions, that could cause some economic trouble.
Just for the consumers, there has been some speculation that there'll be some news maybe on relieving the amount of VAT on energy bills, just because we've had this spike in prices. Do you think he will be that fleet of foot to come up with these minor adjustments just to help people at the moment cope with the inflation we see around energy?
Well, look, it's usually very difficult for chancellors to fine-tune the economy in the short run, but what we can see is across the whole household sector, consumers are actually in fairly good shape. But at the bottom end, the energy and cost of living squeeze is significant. So if he can find something to actually temporarily ease those budgetary constraints on households, that would be significant. But the market shouldn't overreact to that. It wouldn't really change the consumption outlook much. It will simply just be a kind of a political and economic device just to help those who are really struggling.
Kallum, I want to just pick up the point around this rainy day fund that Sunak is likely to come up with improved forecasts expected from the UK fiscal watchdog that should bolster his chances of putting money aside. And we call it all sorts of different things depending on the industry, provisioning in the banking sector, rainy day fund at home, or a sinking fund if you're talking about property. What are the chances that this is going to be a decent fund, and what are the chances he's going to have to tap into it at some point?
Well, of course he'll tap into it at some point. I think that this is kind of a misnomer in the sense that it implies that the UK has some kind of restriction on how much it could spend and borrow in the near term, when in fact that's simply not true. So the Chancellor either decides to reduce the deficit or he decides to borrow to finance spending. Those are only his only two options. If he puts together this rainy day fund, it's purely for the politics and the theatre. It has no economic relevance whatsoever, in my view.
Speaking of theatre, can I ask you about the ramifications for the Bank of England? Because it feels as though we've seen a fairly decent performance from Andrew Bailey talking up the prospect of interest rates, which is in some ways out of context versus other central banks, from the ECB to the Fed, that are still very much on the page of being supportive to economies here. Do you think Andrew Bailey is going to go for it, and there are ramifications from this budget around interest rate hikes this year?
I don't think the budget has a major impact on the Bank of England outlook. I think the Bank of England should and will go before the end of the year. I think we get the first rate hike in December. I'm hesitant to loosely compare the Bank of England situation to the Fed and the ECB, because the Bank of England is going first, not because the inflation or the economic circumstances in the UK are significantly different, but because, A, it has a different policy objective than the Fed. It has a point target with no concern over employment. The Fed has a dual mandate, a very flexible dual mandate that allows it to tolerate more inflation. And the ECB has to compensate for a decade of disinflation, which the Bank of England doesn't. So the Bank of England is reacting to the same circumstances with a different mandate and with a different economic backdrop. And it makes sense for the Bank of England to normalise at this point.